Michael, pop,
Hello.
It's
bro.
Phil. Phil.
I'm just telling you, pop. This is crazy town.
Okay. Well, for all the people out there that talk shit and say that there's a lot of conspiracy with me and I get a lot of bullshit. Listen, I don't think anybody else is ever seeing this much opposition trying to do something because I'm right. Because I'm teaching you exactly what's going on. And it's not going to stop me. So, I'm going to continuously do this shit. So it is what it is. And if I can't do it through this medium, I'll find another medium. Okay. So it's not going to stop. So all these little, things, these little hiccups, these little barriers they're creating isn't going to stop me from showing you everything that's going to happen. So, as long as I'm here, I'm going to keep trying to do it. But I don't know if you guys noticed on your chart that that fair value gap that returned back to its original utilization at 15 minutes after 8, did it keep your candlestick's bodies out of the upper half and then dump down to the fair value gap that I called for below today's Tuesday regular trading hours opening range gap low, and then take out the 26,695 level I said I was looking for today? Did yours chart do that? Because I'm looking at mine. Mine looks like it's done it.
Yes, sir.
So that's why they're trying to stop me. Okay. That's why they're stopping the stream from connecting. That's why they're fucking with me on Twitter. Okay. A couple months ago, they took my account from me. I couldn't access Twitter. I didn't want to bitch about it and cry because I didn't want to draw too much attention to it. But there's a whole lot of other things going on behind the scenes. Okay. I'm just letting you know that there's a whole lot of other shit behind the scenes here in my local area at my house. Let's put it that way. So I'm just letting you know, I'm not scared. I'm not worried about it. I'm going to continuously keep doing it, and they can kiss my fucking ass because I'm going to continuously do what I'm doing. So how's your day going?
Excellent. Michael, I worked long and hard over the weekend. I want you to know I surpassed my deadline by 24 hours, but there was an email sent to you, and there's a video and some things that need your guidance, leadership, and feedback on. So pretty please. I just mentioned that because of our anniversary and because it was a milestone for me. It was really important that I was able to get some things kind of collected and distributed to put into that email to forward towards you. So if and when you get a chance, there's that. So happy anniversary, mate. I wanted to say that as well now that I have you here. So 36 months in, really, really, really happy, really proud of everything that we've been able to do. And all of the feedback has been so wonderful. That's what I'm the happiest about, brother, is the feedback.
I think about that, and it's like time is literally flying by. Like, I mean, we're getting ready to go into May already. I mean, think about that.
I know.
The year just started. Time's just like zipping by. Crazy. I want to also reiterate that we may be doing the babysitting thing for them.
Oh yeah,
a few times
totally.
a day. Not per day, but per week. And they're trying to work out their schedules to see when we would be doing that. So that might actually impact the amount of time that I can put into all this stuff. So
Understood.
just let you guys know.
And we appreciate that.
But,
And you prioritizing pop is extremely important to us as well. We want you to know that's very important to us. You already give so much to us. We're here to work with each other and to be the community that you've built that is working on your work. So for you to be able to spend the time and energy with your family, know from us, that's very important as well. So, and we appreciate your time and energy here. So that's that.
But anyway, I apologize if I disrupted what you guys got going on. I only got about 40 minutes while I'm getting what I'm getting done. But I'd love to hear what you guys are talking about today.
Yeah, we'll just keep the conversation, keep it flowing. I mean, we got a bunch of folks here that's been really good. Pretty much, I'm trying to keep everyone on topic with the live stream. So we're focused on that. Have not heard much from Pit Munch. We have Nikhil here. Nikhil Sharma here with his hand up. Nikhil, you want to jump in quick?
Yeah, definitely. Thank you so much for this. And
I know today's topic is very different, like ICT live stream, but I don't have any very much question about it. I just wanna express my experience and the
Okay, so
journey
you
with
you'd like to tell
my
your story to Michael in the
yeah
community. That's okay. I mean,
yeah
that's
so
okay. We're trying to stay on topic, but that's one of our topics, so I like it. Go ahead, buddy.
yeah yeah. Thank you so much, and I wouldn't take much time. So I am from India and I trade in India markets. And when I'm not trading in India markets, I trade in Nasdaq just to practice my tape reading skills, the way Michael taught it on YouTube. And when I just like some of my friend told me about, like, there is a guy on YouTube and he teaches price action so well. And when I open the Michael's, the YouTube, and I gone through the content, core content and 2022 mentorship, I was just blown. And Michael is the kind of person, I don't know, he reads the mind of the student just before he knows it that he's reading. Like, I remember in one of the lectures, Michael telling that now you now you thinking of someone coming on your door and knocking you and gonna caught you up, that what do you know now. So I was amazed, and I just got to know about trading in 2023, and I just found that it's the only thing I want to do in my life, and got really
Hey,
passionate
hey,
about it.
hey,
And
Arnav.
yeah. Yes, kid.
How long have you been trading, buddy?
It's been 3 years now.
3 years.
Yeah.
Um, what's your model look like? How do you engage with price?
I only trade like 2022 model. My life focused on that,
Ooh,
and
that's a good model.
yeah, yeah. I just
What time frame do you like to do 2022 on, mate?
uh I obviously I do check my biases on daily and weekly. Then I switch to 15 minute, 5 minutes, and I take trades on 2 minutes. Yeah,
So
I prefer two
so
minute
you're
time
looking for
frame.
the
Yeah,
2022 coming off of the 2 minute fractal, yeah? From
yeah,
with
yeah,
your higher time frame bias. Okay. Okay.
yeah. High time frame, definitely.
Okay. And how old
Yeah,
are you again, buddy?
I'm just 25 right now.
Okay, you're 25.
Yeah,
Excellent. Excellent. You've been trading 3
yeah,
years, 2022,
yeah.
and you're very, very happy with all of the experience that you're getting and that
Yeah,
you're
very good,
learning.
very grateful to
Naturally,
Michael and
naturally.
you guys.
Have you been listening at
Yeah.
all to the live stream? You missed today's live stream, correct?
Yeah, actually, I'm working the job. I'm software
That's okay.
developer
No, that's
also.
okay.
So,
If you got a job, we understand, buddy. That's okay.
yeah, yeah, but I try to engage as much as possible.
Okay, so in the 2026, what has been some good, thoughtful feedback for what you've learned? You've got Michael, your mentor, right here, and you're giving some flowers. What's some good
Yeah.
feedback for what 2026 this year? What's it been for you? How's it been so far?
It's been so great. Like, I was consistent with my returns. Like, I made in January like 20% a month, 17% in Feb, and 16% in March. And it's still April is going on. It's going so good. And I'm pretty sure I will hit around like 18%, maybe 20%. And it's the first time I'm getting this consistent. I was never this consistent ever, because I have no idea what I was doing. And it was before Michael, it was feeling like, I don't know I will ever made it. I will ever be I will be able to made it ever before Michael. But after Michael, I
Oh,
get,
wow.
oh, I thankful for God. Okay, thank you, God, you gave someone true mentor. Now I can do it.
Okay,
Yeah,
good.
it was like,
I love it. I love that for you, buddy. Good job. Good
yeah,
returns.
definitely.
Good returns. We got a lot of folks here, so I'm going to keep the conversation going, keep it flowing,
Oh,
stay on
give
topic.
me 10 second more. Give me 10 second more. I just wanna ask, like, as Michael says, the price is fractal, and it is not limited just to Nasdaq. It works in every market.
Yes.
So should I synchronize the things Michael said for Nasdaq, like 8:30, it's in India like 9:15 a.m., and the things like weekly range, daily range, like, it doesn't make any difference, right?
Correct.
Yeah. And only one thing, I got
Okay, okay,
sometimes this
that was your
thought.
question, buddy. It wasn't that great of a
Yeah,
question.
yeah.
But thank you for
I
your
appreciate your excitement. I
yes.
understand that you're
Thank you.
excited,
Thank you,
and
Michael. Thank you, man. I'm really nervous. Like
I'm
it's
not,
first
and
time talking
I
to
don't
you.
mean to. I
Yeah,
sometimes come across harsh. I'm not trying to break. It's people like Kit. You're crushing his soul. I'm like, no, I'm not. I'm not trying to crush anyone's soul.
it
yeah.
kind of makes me uncomfortable when it gets real gushy. So
Yeah,
in a lot of
I'm.
ways, I'm
Yeah,
glad it happens like that because nobody
Yeah.
knows how to stop once it starts
right.
going. And
Exactly. So
Yeah.
I gotta be bad cop here, and I gotta tell people to just sit down. Thank you. We appreciate it. I understand you're nervous,
Thank you. Yeah, yeah.
and we're gonna keep the
I'm honored by
conversation
your
going.
comments, by the way. I'm
Thank
very
you, Michael.
honored.
Thank you so much. Thank you. Love you, Michael.
You're
Thank you
very
so
welcome.
much.
Arnav
Yeah.
coming in, breaking all the rules. That's okay. El
Yeah,
Gobo.
I'm gonna be the great, one of the great student of Michael. I'm gonna be.
That's great. That's great, buddy. Let's get back on topic, if you don't mind. Pit Munch, do you mind if I bring you in? Do you mind spitting off a few notes for us? Do you mind getting us back to where we were at, what we were talking about? Do you mind helping us get back on track, please?
Yeah.
Definitely, definitely.
No, not you, Arnav. Thank you, buddy. I love you.
Sorry.
Just
We love you.
Arnav, just sit down, buddy. You're doing great.
Yeah. Thanks.
Okay, jump in, Pippi Munch.
Okay, hello. Say hello back.
Oh, okay. Hello.
Hey,
Okay,
What's
thank you.
up? That's what you really want.
Yeah,
Okay,
well,
well, I got two things that I want to say something about. Michael gave some sauce about the fair value gaps. He said when price has used a fair value gap, then you call it first utilization. This was about a SIBI today. Well, if it's the first utilization, then of course you want to see premium sensitivity. That means that you want the bodies to respect the upper half. And if it does that and it inverses, so it becomes later on, it becomes a busy because it inversed, then that is the inversed fair value gap that you want to extend to the right. So and then he also said there were two. He also said you can extend that one as well, but there was one that had more details. That one had more bodies respecting the upper half, so like more proof, more confluence for premium sensitivity, and that one was like more preferable to extend to the right. So that yeah, that I like that. And then he also said that if it later on, because now we are above this, the SIBI, right? It's inversed. If later on we go below it again, then it returns to first utilization, and then you want premium sensitivity again. I'm always a huge fan of details like that. That's I like those little
First presentation, first
refinements.
utilization. These
Yeah,
are additional processes.
yeah,
These
that's
are
pretty cool.
added to a ordering. I would, I mean, dare I say a sequence, right?
Yeah.
That's fascinating.
Did you see it happen today though? It's one thing talking about it and hearing me give it conceptually, but did it deliver today?
Per the exact specification that you outlined, yes. Yes.
That's what I was hoping to see. I want to hear people really come to terms with the fact that this is logic that the market tends to follow. And it would not be doing that if it was not doing anything but an algorithmically delivered. If it was anything buying and selling pressure, the things I'm outlining, the PD arrays I'm talking about, and how they're going to change their influence over price, it highlights when that algorithm will start talking and start showing you things that you have to interpret in price action while you're watching it. You can have the PD arrays and then anticipate a specific response, but until that shows it, it gives you kind of like a qualifier that now, yes, everything has shifted. Either it returns back to its first utilization or its inversion, one or the other. But you're looking for where prices actually used it in the past. So they're not stale. They're not, well, we're one and done. So I want to make sure that, I just replied to, and I usually don't come back at anybody in the section of the comments during the roundup, but some dickhead literally tried to say I call both sides. I said if it went higher, I would not be interested. I'm only looking for lower. I'm only
Yeah.
looking for lower. So there's
I
no
mean, good news
ambiguity
is
there.
it's recorded. It's not, there's no ambiguity. You laid out very specifically exactly first utilization in accompanying what has already been the logic of first presentation, and it's you introducing something within the audience. So the fact that we do have dickheads here that want to come in and try and say anything, I'll tell that dickhead, sit the fuck down. Shut the fuck up. You don't belong
I would
here.
love to. I would love to listen for his bitch ass to come up here and
Yeah,
explain
come
where I
on
called.
up. Come ask for
Call
her
where I
speaker
said all
tag.
that stuff.
Yeah,
Okay,
come
talk
on,
about
get
it
a
in
speaker
text.
tag, buddy.
Bring your little bitch ass up here so I can clown you in front of everybody.
Yes,
Okay.
because it's recorded. It's clearly recorded what was said, and for anyone to
Nobody's hiding. Nobody's fucking
no.
ducking. Okay.
And by the way, your inversion fair value gap that
Mm.
played off of the 558, which is like a macro fair value gap, the way that we inverted right off of that on the impulse there, that was nice. I really like seeing the left side support the right side of the curve. So anyway, I just wanted to add that. Different
Sorry, Pet
concepts.
Munch.
Yeah,
Yeah.
yeah, keep going, Pit Munch.
Okay. There was something else that I liked as well. So there were two, well, let's say first utilization CBs, and then yeah, let me see. Yeah, so you have two of them. He spoke about the event horizon, but the thing that I found interesting about it was when he said the lower one, when you're in there, the lower one can function as a decision-making point, as a foothold. So if it's in there, you're looking for the body showing discount sensitivity, because you're above that. You're in between CBs. You're above the lower one, so that one is inversed. Then you want discount sensitivity. You want the bodies to stay above the lower half, and that one you're not going to execute on that. You want to see it as a decision-making point, as a foothold, and then you want to see if it launches higher to the sorry, to the upper one, and that's an inversion fair value gap. That's then your execution point. So that's another one of those details that I yeah, those are nice to remember, and if you memorize them, that's like it adds a lot to your precision when you're actually trading. And then I had a last thing about the change in the state of delivery. He used example of up close candles, so a series of up close candlesticks, and which one do you use? If the last one is the largest, you use that one for the opening price, for the change in the state of delivery. But if the last one is the smallest, then you use that one as well for the opening price, for the change in state of delivery. And the last bit, I don't know if I got it correctly, so that's like a semi question. If they are
What do
all
I
the
do?
same.
Excuse me. What do I do if all the candlesticks are closely uniform in their height?
Yeah, that's what I
What?
was going. I don't know if I heard that correctly, but I got, if they are all the same size, I think you said, but I'm not sure, that then you use the lowest one in the consecutive up close candles, but I'm not sure. That's my question.
Yes, that's exactly true.
Okay.
And as I heard you say it, I realized I didn't articulate the premise as to why it matters if it's the largest on the last candle or it's the smallest. And the reason why is if you have a consistent run of up close candles and they're pretty much uniform, but the last one's the smallest one, I'm going to use that last one because it's basically indicating that it's petered out. It's no longer interested in having any more protraction higher. So it's isolating that smallest little point of time with that price. So it's going to be sensitive to that versus when it creates the biggest candle is the last one. That's capitulation. It's like the last little bit of, hey, look at me. So it's utilizing two primary functions of highlighting when it should form and how it should be utilized. If they're all uniform in their height, then it's the last one in the up series or it's the last one in the down series. So it's a matter of the distinguishing characteristics of it being the
Yeah.
last one largest or the last one the smallest. If either one of those conditions aren't there, you use the lowest or first one.
Yeah. Yes, very clear. Thank you. Yeah.
Thank you.
And one last thing that's not about that, but that I wanted to say to you. I have been asking the newer students that are in my DMs. I've been asking them, can you follow the lectures? Is it difficult too much? And I just wanted to say that I've also been looking at how long they've been trading, and they are really, really new students. They are like, the newest one is like trading 4 weeks and hasn't done anything else but your concepts. And the one that's trading the longest was like 5 months. So they are like really new, and I just wanted to let you know that.
Excellent, Pit Munch. Thank you very much. Wingaru. And then Sarman.
Where's that?
What's that? Hard to follow Pit Munch on that, though.
Yeah, buddy. So, hi everyone. I'm Wangaru Junior from Kenya. I'm a scalper and I trade the Nasdaq. And yesterday I had a question, but X refused to take me back to the space. But can I post the picture real quick?
Yeah, go ahead and post a picture. That was we had a conversation yesterday. You had a question. You wanted to post a picture. So today you're posting the picture with the same question, correct?
Yeah.
Okay.
So
Did you post a picture, mate?
yeah, I'm uploading it.
Okay. Okay, I feel like we gotta hurry up here.
Hey, Kit, how do you determine who you're going to bring up next? Because I see a student named Natalie. She's trying.
Okay, yes. Let's bring up Natalie. I sent you the, you have a co-host tag there. I don't know if you can see it, but if you had that, you could then bring up different people as well. But yes, I got you. We'll bring her up. I got lots of.
I don't see any tag that you're talking about, and I don't really want to mess with anything, and I'm afraid it would kick me out.
No. I got you, buddy. I got you. It's okay. It's there, but
Yeah, the picture.
Natalie, you said.
Yeah, the picture is uploaded.
Okay, buddy.
Maybe if you can check it, I'll explain how to. Can you see
No,
it?
I can't.
It's already there 19
Okay.
seconds ago.
Wagaru.
Natalie asked a question
Wagaru
as well.
Jr.?
Yes.
I can see your chart.
Okay, good. So Wangaru, pretty please ask Michael the question.
So Michael, as you can see in the picture, there is a pre-market Monday low. It formed. Then intraday, during the regular trading hours, it formed another low. Then on Tuesday, you see it, that the Monday regular trading hours low, you see it?
I can see it.
On Tuesday, we opened, we took the intraday low, the higher low, then we dipped during the regular trading hours. So as I was asking, you said when we take a previous day low, then we retrace higher, we expect for some deeper retracement. You said that, right? So I was asking, if it takes the regular trading hours low, is it the same as a previous day low, or we anticipate the previous day lows, lower low?
Well, if there's a lower low, that's always in contention, but you can treat a regular trading hours low the same way as a previous day high or low. They're session highs, and regular trading hours and electronic trading hours, both of them are time-based ranges. So their liquidity is going to be pertinent to what you're expected to see in terms of price delivery. So there's no advantage over one or the other. They both are potential. But if there's a lower, like in other words, if I'm looking at regular trading hours low, but then I said that wrong. So if I'm looking at electronic trading hours low, and I see that there's a lower low in regular trading hours, I'm going to default to the regular trading hours low, because it's price tends to want to book more specifically on regular trading hours than electronic trading hours. Electronic trading hours can have its own little rules, and it can play in its own little sandbox, but everything comes home to roost during regular trading hours, because that's the professional hours. That's where all the big boys come in with the volume and whatnot. So if there's a question of which low I'm going to look for over the other, I'm going to aim for regular trading hours over electronic trading hours.
Okay.
Does that answer your question? I'm not sure if it was helpful.
Yeah. I needed that clarification because that was an observation made.
Good question,
Awesome.
Wayne. Good question, buddy.
Yeah, thank you.
Let's keep it going, keep it flowing. Natalie, you had a chart and Michael referenced it. You want to talk about that?
Well, I didn't see a chart. I just saw her post
Okay,
saying
well,
that she has a question.
she has a chart in the comments as well, Michael. If you scroll through, I had seen her chart, so I apologize. I had seen Natalie's chart in the comments. I presume she had a question in regards to that chart. But Natalie, welcome to Trader Roundup. How are you?
Hi, thanks for having me. Finally glad to speak on it.
If you could do me a favor and repost this, that way I can see it at the top of the list. It's a lot easier for me to find it.
Okay, let me see. There we go. So yes, I have 3 questions total. Admittedly, I didn't finish watching the recording. I didn't get the notification for some reason. I don't know what's going on there, but
Bear with me 1 second because I don't see it yet.
Oh.
Okay, just give me a second.
You're good. Let me quote you.
I'm not seeing it.
Here. I quoted you on it. Maybe you could get it directly then.
Dan Trades is the top one I see. That was 26 seconds ago. I don't see.
Let me try posting it again.
Is anybody else seeing it? Because I'm not.
I do. I see it.
You do?
I see it.
Yeah.
Yeah.
You can just click on her profile and go to her
No.
replies.
Just she'll resend it. It's no big deal.
Yeah.
I mean,
let me try again.
Yeah, but it should be showing up for me now, man. She's done it several times.
Yeah. Let me see.
I see Alex. Okay, now I got you. Thank you for that.
yeah. Thanks,
Okay,
Alex.
All right, so now I see your chart. What's your question, ma'am?
Yes. Okay. So I have 3 questions total. So the first one is, in the past, you've talked about using the first fair value gap of the leg that it can return back to, but you said today that the fair value gap that you had to draw to, that wasn't the first fair value gap of the leg that it could go back to. So I'm kind of confused why you didn't use the 947 one that I have highlighted in yellow instead of the green one.
Are you referring to 952's fair value gap? Before I closed the stream, I said it could draw down into that.
Yeah.
Okay, I wasn't bringing that to light as the first presented fair value gap. I was looking at it in terms of what the low of the session was, and that formed at 9:35 a.m. and where we had traded to at the high at 10:17, 1 minute chart respective. So if that range back down to 9:35, we're looking for a discount. So if you split that range from 9:35 up to 10:17, drop your fib on that, and 50% below that is discount. So what fair value gap stands out? That 952 does. And I said, if we go through that, then it would be the low, because I tipped off that one single candlestick at 9:39, 1 minute candle, because it had that little body below the opening range gap for today. I mentioned that to me signals maybe later in the day that we would go lower. And I told you on X that 26,695, well, not 50, but even, that was my draw. That's what I was focusing on today. But it wasn't that it was the first presented fair value gap. The first presented fair value gap would technically be 931. And the reason why is because it's displacing lower in the direction of the gap being the draw. Okay, so I'm looking for something that always pull us back into the range of whatever the regular trading hours gap forms, the encroachment or full gap closure. And until those conditions are met, I'm sticking to that narrative because it might be a fair value gap that forms like the last few minutes of the 9:30 to 10 o'clock opening range. And that still would be my first presented fair value gap because it's in the context of it gravitating towards an expected return into the fair value gap, or I'm sorry, regular trading hours opening range gap. And you can see that 931 becomes a inversion fair value gap utilized on 950 during the macro time. Then we start seeing that run up to take out the high of that fair value gap formed.
So that 947 fair value gap doesn't have any significance, you're saying? It doesn't.
947. Give me a second. Let me find it.
Yeah. Let me see.
Okay, 947. Yeah. That can be viewed as a normal fair value gap, but in terms of what I think it's doing, we're so high up on the daily, and I think it's likely to pull back and retrace because of that. The market conditions kind of like dictate what I'm looking for. So if you're going to look for just generic principles, first presentation, interest trade on that, you'll get understanding, you'll get setups. They won't always agree with narrative because you won't know what that is in the beginning stages of development. But I'm teaching over progressive time, spending time doing these things, looking at it, labeling first presentation, and then building a narrative. You know, the narrative was 26,695. That was what I tweeted this morning. That's the level I want. I want that. And because of those things, I'm looking for a first presentation that gravitates or displaces in that direction. And then that one will be used throughout the morning session. It might be used as an inversion to go up first before going down, but that's the one I'm looking for. And you can see it being utilized today as such. It's not as easy as when I first presented it, because it's like, okay, this works. It makes money. It's good. But sometimes it won't give you the part that matches with the narrative unless you're implying a specific narrative. Okay. So the regular trading hours opening range gap, that's our first factor for bias. You have to have that. Either it's going to consequent encroachment or it's going to full gap closure. And until those two conditions are met, you have to hold on to that until proven otherwise. Okay. I'm gonna have to re-listen to this to like really understand it.
That was so good. That was such a great answer.
Yeah.
If I may, how long have you been using my stuff?
I started in 2024, and
okay, so you're about right. I mean, it's not like you should feel overwhelmed, like, oh, I'm not getting it. You're about where you should be. It's okay. And besides, I really just started teaching a little bit more depth around this whole first presentation aspect.
Yeah.
So it'll build over time.
Yeah, I remember using it like when it was great. Like I understood it better, and then this past year I was like, what the heck? You know, but so another question I had was, since I didn't watch your live stream today because I didn't get the notification, I was expecting continuation after it took out the low, using inversion fair value gap to take out the equal highs. So I'm wondering why the draw was lower when there's equal high, it created equal highs above too today.
Okay, first, what equal highs are you referring to?
I'm referring to the highs that it made at, let me see, 26,873.25, and it took that out, and then it.
Give me a time. Give me one candle to anchor to.
The 1017 candle.
1017.
And if it took in today, and it took it out from 832.
Okay. Were you referencing the 8 minute after 8 high?
8 minute. It's anchored to the 8:32 a.m. candle high there. I have it as
832. Okay, I got you. So, okay, now with those relative equal highs, what is your question around that?
I'm guessing why the draw was still like I was expecting at 8:23 for it to, after it took out that intermittent low, to continue up higher as continuation to take out those equal highs.
Yeah.
I guess I'm wondering why the draw was technically lower still then, because I
When
was
we're
expecting that.
Yeah. When you get an opportunity to watch the stream, I kind of like go over that
Oh,
where
okay.
it became a 50-50 where
Mm,
I could be wrong, even though I'm looking for lower prices. And I said this, I said, I would prefer it go lower. And if it does go higher, it'll be a move that I wouldn't be participating in. Like I'm not secretly doing another trade off screen or whatever. I'm only looking for lower prices. I'm only looking for it to return lower. So when we were looking at the fair value gaps that you'll see me discuss at 8:15 and then at 10 minutes after 8, I go through
okay.
the business of articulating specific characteristics that both of those fair value gaps exhibit, and then how it was utilized during the 8:30 to 8:30, what is that, 8:37, where all the bodies stay in the lower half of that, which we were looking for those types of things to occur in price action if it's going to be an inversion fair value gap or even a
Okay.
continuation of a regular bearish fair value gap. So we're using order flow
Okay.
concepts. So I go through the
Okay.
business of talking about how it could go higher. I'm personally not interested in doing that. I'm looking for signatures that would lend well to going lower.
Mm,
So
okay.
because I was looking for the breakdown, because we're so high on the daily chart, there wasn't any follow through this morning that warranted, in my opinion. And because they left those relative equal highs that you even noted here, that sets the
Mm,
stage for them to run that before dropping it lower.
mm, okay. Okay.
There's
Okay, that
times
makes
where
sense.
there's times you're going to see where relative equal highs and relative equal lows are there and they can be blasted through as a target and it would be a partial and then you look for it to keep going in that breakout.
Yep.
That's not what I'm looking at today, and I kind of like was trying to build that premise around the market this morning. I can be wrong and it wouldn't be a participation on my part if it went higher. I'm focusing on things that would lend well to see it go lower. And before I
Okay.
close the stream out, I talked very specifically about the 8:15 candlestick, and I said I want to see the body stay in the lower half of that. It can wick and punch through it a little bit, but the bodies have to stay in the lower half. And I left the
Okay.
stream with the targets that it reached today. So
Okay.
I think a lot of the questions that you're having,
Mm,
I may not have done all that great a job of explaining it, but at the time, real time over candlesticks, watching it, that was my goal to try to articulate why I'm not bullish and why I would look for lower prices. But I think
okay.
is that your second question or is that your first?
My second question.
Okay, what's your third?
And I have one more. I don't know if you've ever spoken about it publicly, so it's okay. But I noticed that Friday's first presented fair value gap going into the next week is sometimes a draw
Mm-hmm,
or used in some way.
mm-hmm.
I just don't know how to put that into a model. Like I tried to back test it. I don't know how to like put it together. And if you don't want to speak on it, it's fine. I don't know if you
No,
have or not.
no, I've
But
talked about it. I've talked about that before. I've talked about using
okay.
Friday's opening range gap and carrying that forward. And previous, correct me if I'm wrong, Pit Munch, the last 2 weeks, previous, whatever week you're trading on, you want the Friday and the Monday of the last 2 weeks. You want those. And you
Yes, we
want,
Mm,
spoke about that.
yeah. And by utilizing those, you can literally just trade volatility. That means you can trade
mm,
without a bias. And if you can see a smaller time frame, like 1 minute or sub 1 minute pool of liquidity, like relative equal high, relative equal low, and price is moving lower but hasn't taken the relative equal lows out, and then returns back up to those very specific first presentations from Friday or Monday, that is many times utilized as a catalyst to then run for that liquidity. And you're trading without a bias. You're just looking at intraday, small time frame pools of liquidity, and you can do that all day long, up, down, up, down, up, down. And it's a very liberating thing when you practice like that because it doesn't force you into, I have to know the bias. when you just need to look at what is it likely to give me right now, and can it give me 15 to 20 handles? And if you walked outside and you had a $100 bill, down every step of your front of your house, would you pick it up or would you walk past it? You pick it up. So this is one way for you to go into the market and start looking for it without having a model, just simply looking for volatility and then running to small short-term little pools of liquidity.
Yeah. Well, I mean, I guess what I'm asking is, well, I'm going to go back and back test that and see how that applies. But is there a way I can make that into like a swing trade model, though? Like a weekly type of trade that I hold
Yes.
out, like hold out for the week with
Yes.
like with the Friday first presented.
Yeah, and one way you could utilize that, let's say we're in better market conditions, okay, and we're not seeing all this crazy volatility, and I don't know when it's going to end, so I'm at a loss for that because I get questioned that a lot in email and posts on TradingView. They're coming at me with, how long is it going to be like this? I don't know. Like I don't know. But when we return back to a normal type of market where we're not seeing this crazy breakneck speed volatility, what you can do is, if you're bearish, say you're looking for a significant low on a daily or weekly chart, and the market has traded down below Friday's first presentation or previous Monday's first presentation, because Monday could be lower than last Friday. So whatever one's closer in proximity to market price, if you're trading in the first hour of trading, that first dealing range, that means 9:30 Eastern time to 10:30 Eastern time. Many times it'll return back to that, and that'll give you the catalyst to sell off for a longer term daily or short term or one shot, one kill is what I used to do. Where you got to be comfortable holding overnight. And if you're not comfortable doing that, it isn't going to work for you. But many times you'll see those actually being the first catalyst to send price in that favor of a higher time frame draw, like the daily or weekly. So it's a real simple approach to utilizing it. It's not complex, but it requires market conditions to be, useful.
Can I just add real quick, Natalie? One thing I'm listening to what you're saying is like understanding ICT Michael's daily and weekly profiles. Like really focused on a weekly profile, really focused on a daily profile. Understanding, I as a student as well have spent a lot of time on daily and weekly profiling. Your if then logical statements, this idea of you swinging, really understanding the daily and or the weekly profile makes swinging a lot easier.
Okay. Yeah, that is my my weak point, I will say.
Month 6 is going to give you short-term trades, so you might want to look at month 6 as well as your 8, and then include 7 as well. So 6, 7, and 8 on core content.
Okay. Yeah, like I'm better at I feel like scalping and just tape reading than
But profiling
yeah.
is a very important thing, and if you're trying to do what is not being taught right now and trying to do what you said, I mean, what Michael has talked about is not having a bias coming in and taking from the market what the market is willing to give. And if you're trying to come into the market and trade specific profiles and trade specific weekly templates, that's how you will find success as a swing trader.
Okay. Okay.
Are you saying that you're right now excelling in the intraday stuff, but you want to kind of explore into a larger time frame duration trade? Is that what you're doing, or that's what
Yeah.
you want to do and you don't want to do?
Yeah, that is what I want to do, I think, because I mean, I'm more day trading, but I was curious about if like recently, the past few months I've been having a hard time day trading, so I was thinking about trying to swing something. So if I was down for the week, at least maybe I would have a swing that could
Gap
help like
risk,
offset that.
gap risk makes swinging extremely difficult if you don't have the account.
Yeah. Yeah, that's another
Or the
thing.
heart, because I'm honest when I tell you I am risk averse right now when it comes to overnight gap risk. Like
Okay.
there was times where I would take trades and I would hold it for 3 days, 5 days, hold it over the weekend and then bail out on Monday when it was, showing that the trade was in my favor still. I would have no problem doing that. And you've watched over the years where I have receded from that because of the market conditions. And I'm older. I feel it in my body now. Like I feel the potential to lose because I'm not trading little micros. I have size on my positions. So if I'm going to get crushed with a big Trump-driven, we're going to open up the Fountain of Youth over there in Iraq and everybody's going to get a free cup. The market's going to go crazy, and you don't know when it's going to happen. So because of that, I've been conditioned to say, I'm going to respect the measure of risk and I'm just going to focus on intraday. So someone like yourself, you might say, well, I get it. I can do that now, but I want to explore the higher time frame runs on liquidity or using a higher time frame daily chart, so I don't have to babysit the market so much. And it's admirable, but I don't think that I can give you a model that's going to be all that safe right now because of the conditions that we're in. I want to go back to doing it myself, but I gotta evolve just like everybody else does.
Well, and I think I excel at mostly like the 9:30 open, but recently this past year we've been having like double Judas swings, and I'm getting like caught in them, and like I guess what I'm asking is like how can I predict? How can I anticipate when there will be like a double Judas swing day, too?
Well, when you implement the regular trading hours ranges and where their pools of liquidity are, and pre-session between 7 o'clock and 9 o'clock, look for those highs to be taken. If a shallow run above a pre-session range buy-side liquidity pool is taken, but they have another relative equal high just beyond that, and if you don't scroll back far enough to at least 7 o'clock, you won't see it. Many times it's just doing that. It'll take the small one first and then start to run away. And that's like a red herring. Like you ever watch a baby bird that's trying to learn how to fly and the mother's on the ground with it. And if a cat or a dog comes near, the baby's mother will run away from the baby and then break its wing open like it's hurt. So it runs after it and say, well, it's that fake red herring type of a move. And then you get the real run when it runs for the liquidity that it left the first time. So you're seeing those things happen, but they can't hide it from you if you're looking for it with that perspective. If you don't look for it like that, you'll always probably get caught offside.
Okay. And if I'm having a hard time finding the relative equal highs of pre-market, I should just stick to the 1 minute time frame though, you think? Or drop down lower if I'm having a hard time?
1 minute will give you everything you're looking for right now, especially if you're just trading in the first hour, like that first dealing range of 1 hour from 9:30 to 10 o'clock. You don't need to look at anything other than a 1 minute chart. Like it's literally everything is there. It's a complete self-sustaining universe. Like you don't need anything extra.
Okay. Yeah, because I was trying to back test and I was trying to see, because I know you said take out relative equal highs first and then try to draw in the opposite direction of that, like as manipulation. But I was still having, I'll try to look back again at that.
Make sure that you're looking at the full range all the way back to 7 o'clock Eastern time. Okay? Because if you go to that and you put a vertical line, it's okay, from that point on, go to the right. Where is there a single high that moved considerably lower, or a single low that moved considerably higher, or relative equal highs? And if there's a smaller set inside of that range that they may run for, anticipate them going to that lower one, or the easier one to get to, basically, and look and see if they're going to do that little trap of start running. Sometimes it will just do that, and you'll miss the move if that's what you're trying to do. And I don't want to make it sound like you're going to capture everything and never miss, because that's a fallacy I believed too when I was first starting. Like I wanted rules to protect me, never lose a trade, always catch the big runner, and never have any difficulty. So while I have a lots of tools and lots of concepts that help give me an advantage, I'm still wrestling with what you're describing too sometimes. Like this market is making me have to work. It's not easy for me right now. Like today, reading it with everybody, it was not hard. You'll hear it in the live stream, but I was still bearish and I was looking for lower prices.
Okay. Yeah. I've been feeling very like trying to find my place, and I'm only 2 years in, and I'm just like, I'm trying to, this is
you're in good company. You're in good company. Everybody's being challenged right now. So if you're feeling that, even if the folks that are not going to come up and say anything, if you're feeling that, and we've been trying to bring this up each time this stuff is being discussed, it's difficult right now. And anybody that tells you it's easy, they're lying to you. I promise you, they're lying to you just for ego purposes, or they're trying to sell something. Everybody's being put to task right now. It's not an easy market, and the more you guard your equity and your peace of mind and your mental equity, that means don't fatigue yourself trying to force yourself or your trading to be perfect. Just dial back and say, okay, I'm going to take one setup or two a week until I get a better footing, and that's actually that's productive. That way, you're not stressing yourself out. And you're not looking at yourself saying, I should have done better than I did. That's the worst thing you could do right now.
Yeah, definitely. Yeah, definitely tested me this year, like emotionally tested me. I think that's all the questions I had, though. I probably have more eventually. You
Great
always see
questions,
me.
Natalie. Really, really
Yeah.
good. I think everyone in in the community can benefit from these.
Yeah.
So
I
really,
have more
really good
up my
questions.
sleeve, though. I have more up my
That's good.
sleeves,
That's
but
good. Well,
eventually.
yeah. I would just say my thoughts or 2 cents to you would be within the compendium of knowledge that Michael has. Maybe month 10, episode 5, 6, 7, 8, 9. You want to look at the indices and the weekly profiles, your classic up day, classic down day, your range day, when not to trade, probably too. By like, for example, today's been pretty much dog shit. So instead of expending energy on worried about anything, just like clip Tuesdays or clip in your head where there are a few days that might not be optimal for trading and
Yeah.
spend less mental energy trying to solve that, right? Filtering
Yeah.
yourself out of trades the way Michael's explaining. And for me, just from what I heard, focus on studying profiles. You need daily and weekly profiles. That context will help you within your daily draw on liquidity and then the narrative and
Okay.
bias.
Yeah, I'll definitely keep that in mind. Yeah, thank you so much for your help. Finally, I finally have clarity. I'm always
Good.
tweeting to you, so
It's
yeah,
awesome.
maybe you'll see it. Other questions.
Awesome. Glad you had an opportunity to come up and talk and hopefully done a service to you in response.
No, you did. Yeah, definitely. I'm gonna listen back to this and back test it.
There's definitely a lot to listen back to on this one for sure.
Yeah. Thank you.
Quite welcome. Kit, we got one more we can do. I'll squeeze in, but after that, I gotta escape.
All right, I got you. Sarmat had his hands up. SHC had his hands up. I have the 2 speakers. We're gonna save Sarmat. SHC, you're the last one for the day. And Sarmat, jump in my DMs. We'll talk, buddy. No big deal. SHC, I can't hear you, buddy. Can anyone else hear them?
No.
That's a negative.
No.
Okay, sorry, SHC. Yeah, tech. I get, bro. Tech difficulties. It is what it is. So, Sarmad, your last one up.
Can you guys hear me?
Go ahead, Sarmad. Yes, sir.
Yeah. Okay. Perfect. I have 2 questions. Do I have to introduce myself?
Briefly, it would be nice.
Oh yeah. So I'm 36 years old. I'm a rail car mechanic. I've also done 10 years in the military, the Canadian military. So that was my first profession. Now I'm a rail car mechanic. I'm from Toronto, Canada. My question today, is it me or like every time I watch ICT live stream, like the price is like held in consolidation way longer, and I don't know if I'm a conspiracy theorist or something, but it's kind of like
They're
it
watching.
doesn't.
And that's somebody.
Okay.
If you spent time with me any length of time, especially private mentorship students, because I used to call price in our sessions behind the paywall, and we never had these problems. Like it was not like this. And you think about how much we talk about as a community and what we expect as a community in price action and how right we tend to be. And our community is growing. It's enormous. And YouTube's like, blackballing my statistics. Like there's no way I'm gaining 20 to 30,000 new subscribers every single month. And the viewership drops. And I had a live stream with 50,000 people watching on a Saturday, and I didn't even announce it, but 50,000 people were watching. And then 5 minutes later, it ghosted down to 2,000 people. And my stats never reflected the 5,000. So I know they're pocketing all the money, and I know they're taking advantage of that situation too, but they're also throttling me. That means they're trying to keep me from talking about these things as it's happening real time. Because even though I tell you don't trade, I know a lot of you are doing that. And I'm extremely interested to see other people observing it, because I didn't want to say it. I didn't want to draw any attention to it. But I have had longtime students, reaching out to me saying, listen, do you see? I said, yeah, I know what's going on, but it would be different for me. If I come out there and just say it, it sounds like I'm crybaby and making excuses. I'm not. I'm still seeing things in price action, but they're waiting for me to leave stream before they deliver it. You notice that?
I have like I don't do live trading, but when you're done, I'll put a demo, and it would, where you called out the market and where you thought the fair value gap was, turn into inversion, it would wick past it like extremely fast, and then it'll just go in the direction you said.
Mm-hmm.
And TradingView is such a piece of shit.
Yeah.
It wouldn't stop me out, but it still goes in your direction. So it's like that really bugged me. I'm like, why the fuck are they holding it? You know what I mean?
Yeah, you're observing what a lot of the old head students of mine are noticing it too. We're all laughing about it because it's obvious. It's so fucking obvious what they're doing, but it's okay. It's temporary. If you get stopped out and everything's still germane to the trade, just go right back in again. It's simple because they are counting on you getting stopped out and then being scared to get back in. That's the normal reaction. You're like a deer in headlights. If everything's still the same, okay, no problem. That's what I'm teaching you when I say fill. That's fill. That's fill. That's them going in there doing something to disrupt it. That's not buying and selling pressure. That's not anything but simply manual intervention. They know you're gonna get scared and you won't participate. And there it is. And you're seeing what everybody else that's got common sense and you know the ability to see, they can see exactly what's going on. And trolls are going to have a field day with that. They're going to love that and say, oh, look at this. They think, but fuck them. Like it's no doubt about it. You can see it. Like you can literally see it. You know, I'm blessed to have a large community. I'm very thankful for that. And I know that there's participation on the things that I say. And if I say something and people are positioning based on that and they're profiting, that's not how this is supposed to work. It's presented to everybody. Invest in the futures market, invest in commodities market, invest in Forex, invest in whatever, okay, and make extra money. They sell you that idea, but they really don't want you to fucking make money. They really don't want you to do it. They want you to be a victim so they can utilize you as the other side. But that pursuit of pursuing what price is going to do from the things I'm teaching, people are learning all around the world. And large institutions are paying attention to it now. They're seeing it because they didn't trade like this, okay? Like Citigroup, okay? Citi, Goldman Sachs, they don't trade this way. But those motherfuckers are studying my shit because I beat their shit. I beat the brakes off their stuff, and it's visual. You all can see it. You all can see it, and there's no doubt about it. You don't need a Robbins cup to see this shit working. You don't need to see balance sheets and broker statements and who this, that thing. When we're sitting as a community and we say this is what price should do. The market that's having $400 billion a day run through it. And here we are talking about what one single candlestick should do in response, how it should behave after it does certain things inside of that one candlestick. You don't think they're going to start fucking with you? Of course they are. And I'm seeing it. And then they wouldn't be fucking with you if it wasn't effective. And they want to try to dispel any pursuit. The worst thing that could happen, okay, the worst thing that can happen is you look at what I'm doing in a live stream with drills, and it's already happened, and assume that none of this stuff works, and then go do something else. That's exactly what they're banking on. If you feel like you're having to work harder to figure this stuff out, endure it a little bit longer, because they can only fuck with you for a little bit of time, because otherwise, everybody will start picking up on it. There's always these instances where the market will create these little runs on a raid. But if I create that liquidity in a live stream and I pull everybody's focus to a very specific price level and I show you, here's my stop loss, everybody's going to copy that same price in real accounts because they don't give a fuck about a demo account. They know that I'm saying something in price action and it tends to work. So I'm not telling them to get into trades. I'm telling them not to do that. But what's greed going to tell them to do? Put a fucking trade on. And they're going to put a real hard stop there. And everybody's going to do the same thing. And signal services and people are trying to replicate what I'm doing. They're placing instructions in their little discords and their little telegram channels or whatever the fuck they're doing. And they're telling those same people there, this is where a stop loss should go because they're leaning on my experience. So what am I creating? I'm creating by default big pools of liquidity that they can target on one single candle. So don't look at what I'm doing in live streams and think this is all there is. That's why I'm telling you to go into your own charts where it's just you observing it. We're not all dogpiling it onto one specific price level. That's why I've always been reluctant to tell you where my stop losses are because I know that's how it works. And it's funny when you hear these guys that work on the floor or worked on the floor or whatever, and they'll say they don't do those things. When you're saying that you're seeing it too, and you haven't been doing it that long. I mean, you haven't been doing it that long for you to be able to pick up on that unless it's obvious. And since you're seeing it and you're picking up on it, you're joining the informed crowd of people that have common sense around here. It's rigged. The market's rigged. And they want to try to discourage you as much as they possibly can. And I'm saying, don't fall for it. Just keep pushing forward because this stuff is the best that you're ever going to have in market. But go and continue what you're saying. I didn't want to hijack it, but I really wanted to have a moment to stand on my soapbox and say what I said about it.
So that was my first question. My second question, last time you gave me like a little task or something to look for. I was having a hard time with the new day opening gaps and new week opening gaps, right? And today I see like your where you thought the market 26695. That was where Friday's open price was on regular trading hours, and there's liquidity there. And I'm seeing like, okay, if there's liquidity there, like relative equals lows under where the new day opening gaps, new week opening gap price is, that could be utilized as, then you could utilize that price as a sign of liquidity or your sell, take profit or whatever. I just realized that's all I wanted to say. That's it. Thank you.
Sarmad coming up. Did we reach an end, Michael?
Yeah, I unfortunately, I'm getting a hairy eye right now. So,
All right.
but
That's groovy.
I ended
That's
up
cool.
hanging out longer than I told you I would. So you got a little extra out of me. But tomorrow after the live stream, I'm not certain. I'll let you know, but I'm not certain I'll be able to join you. But if you do have one, I'll listen to the recording afterwards when I have an opportunity to do so. But,
I mean, we're trying, buddy. I mean, I feel I was wrestling. Do we come on? Don't we? Just based on the things you were saying. But
yeah.
for me, I try and come here for the folks that have the questions, right? So we're just trying to support the community. So I end up showing up here. Just if there's a doubt, I'm going to come on after you, just because, right? Just for anyone who's got a question. So that's the idea. That's the energy, bro. I mean, that's it. So.
Well, hopefully you guys learned something today. Hopefully the folks that haven't watched the live stream watch the live stream. And it wasn't my best stream. I was obviously late getting to the party because of live stream hooking up with YouTube. And we had some things on the calendar that were problematic. But the way I left the stream, I wanted everybody to focus on that. And I'm pretty content with how it delivered today. And that's how it's going to be sometimes. Sometimes your tape reading session is going to have real world things pop up. And, the dogs tearing up the carpet, the kids are complaining and you got to go in there and take care of them. It's taking your focus away. And that's no different than what was going on today. But just stick to the task. Over time, you're going to get a little bit more experience and a little bit more experience. And over time, you'll have a model, you'll have confidence and experience that you can lean on and say, yeah, I've been here before. I'm not all that together interested in seeing the market run higher, as I was indicating today. It could have done it, and it's okay. You would see me get it wrong, and if it went up 500 handles, you'd be like, you got it wrong. But the takeaway is there's not something that's being executed where there's a loss. You're looking for your model in a context. You're looking for a narrative and why price should do certain things. And over time, those things will make more sense to you because when you hear it first time explained to you like that, it sounds like, oh, he's just kicking the can down the road. I had paid mentorship students telling me that in the first month, the very first month, because they wanted signals. They wanted me, here's the buy, here's the sell, here's the stop, here's the target. And they thought that's what I was running. And they signed an agreement knowing that that's what that was not that. We're just tape reading. I'm teaching you market characteristics that tend to repeat. And over time, you will see the ones that you trust because you've seen them happen in your own hands and being called out. And that's all these things are. That it's for you to grow comfortable from looking at a chart where there's nothing on it. It's a blank, naked chart. In the beginning, nobody knows what's going on. That's the opinion. I would be impressed if someone tells me what this all means. But then when you start breaking down the language that we have, it helps you fortify a rule-based idea, and anticipatory price skills are the default result. But you don't know what those things are going to be for you uniquely. It may not be the fair value gap. It might be an order block. It might be something altogether different. And if you're struggling right now and you don't have a model, you are the very person I'm teaching right now for, because you haven't spent enough time. And I say that, and some people get their ass all twisted up saying, man, fuck this guy. He's an asshole. I've been doing this for 3 years. Yeah, you can do 3 years of all the wrong shit. And you showed up and you put yourself in front of charts and you pushed buttons when you shouldn't have been pushing buttons. Yeah, you've been doing something for 3 years, but you haven't been listening to what the fuck I told you to do. Don't take trades, read price action, build a library of logged time, reading price with no expectation in the outcome. I promise you, every single time I had a student that came forward with that bullshit, the first time I said, okay, show me your study journal. Show me where you're logging everything. Well, it's always bullshit. You're a liar. You're a fucking liar. So how are you going to come to me and tell me to fix your problem when you're hiding the problem from yourself? So when I come out here and I do tape reading, I want you to hear what I'm saying about why this is problematic. This is a point of contention for current order flow. Now it becomes 50-50. It needs to do something beyond where we're at right now to set the stage for it to deliver to what a model may call for. I went in bearish. I'm looking for lower prices. If it went higher, it would run without me. And that's something you take away as an observer, as a student, and say, okay, he didn't take any position. He had no PD rate called out, or he would have took a loss on that. It just ran away. That would be filed under a run that was no participation. You didn't lose, but you gained experience saying, okay, because I'm talking about what these PD arrays are doing real time and how they should behave. After I speak, we watch and see if it happens. And the things that I'm bringing to your attention that are problematic in this market environment, that's the advantage that you got. You got 3 years, I'm sorry, 3 years, been doing a lot longer than 3 years, 3 decades of this. And I'm trying to do my best to encapsulate what I know inside of 60 seconds and make it make sense. That way you can observe it, you can watch it, you can measure it, and still sticking to what I believe my experience calls for in a direction and where I think it may go to. So we're not using retail logic. We're looking at things that I've already taught, and I'm fleshing out more things for the people that haven't really found their way. I've had students just in the last 2 weeks come to me and say, look, I was a 2016 mentorship student. That means that was the first class, the first one, okay? They've not been able to find a model or get over the fear of getting in. They've been doing the drills. They did it not just this one here. They did it last year I did one. I did a live stream where I was talking about, here, this is how you practice. They worked from that time last year all through the end of this year, and then started trading in February. And now they can find their entries. They can take it with no fear, and they have confidence. And sure, please don't be offended by this. Sure, they're only making $200 a week, but guess what they're doing? They're making $200 a week that they wasn't making before. And they're confident that they're going to be able to do that in perpetuity. That's what I teach. I teach you to have a very easy, low-hanging fruit objective to start with and aspire to that, not get the highest payout in history, not be the first one to get $5 million payout. I'm not teaching that. I'm thankful that my students are the ones that hold those titles, if you want to call it that. But I don't harp on that. I'm talking micro still this year. And by having a realistic approach in the beginning and having all these things come together and culminate over time, because you're allowing for that to happen. And I'm not telling you that you're going to learn this overnight. It's going to take you some effort and time, and it's going to take a lot of practice doing certain things that are boring. They seem like they're unprofitable in the beginning. And if you listen to other people, they'll talk you right out of it. But I promise you, all those other people are working a job. They can't trade profitably. They've never made any real money, and they would love nothing more to see you say, yeah, I'm going to join the bandwagon and I'm going to trade something other than ICT. If that's what you want to do, I'm not going to cry about it, because you leaving this and doing something else, and you find profitability doing something else, that doesn't diminish what I do. It doesn't diminish what we do as a community. It doesn't diminish the effectiveness of what it is that we trade with. It doesn't. But the human mind desires comfort. And in the beginning, when you have such a degree of attention placed on one focal person, me, and I've created that polarizing condition, either you love what I'm teaching or you can't fucking stand it for various reasons. There's no gray area in the middle. Either you're all in on what I teach or you're absolutely 100% against it. And I wanted it to be polarizing because it helps me ferret out the bullshit artists. If you're going to be here, that means it's going to take a lot of effort and a lot of work. And you're going to have a lot of questions that take time to answer. And a lot of those answers happen because it's in your hands that you find them. Books aren't going to fill in. Short 5-minute trainer version. I watched the ICT videos, all of them, and I'm going to condense it down, and so that way you don't have to do that. When you walk away, the only thing you saw them do is demonstrate how they're using the content. You can't replicate what they're doing, but you gave them ad revenue. That's all that works. Okay, that's all it works by doing that. And that's somebody that needs grocery money. That's great. I'm telling you, there's no shortcut. I created this stuff. I know how the concepts work together. And I'm telling you, the only way you're going to learn how to do this is by placing yourself in the charts. Spend time with me in the live stream. Listen to the things I'm talking about. Because those are the things that either you've seen them happen in your own trading and you just don't know how to get through it, or it's going to happen to you and now you've heard my point or speaking on it. So it helps get you through that grind where you may be struggling and you're hung up and you just can't get past it. I've had students that were just hardliners that unless I figure out this one question, I'm not going any further. Okay, quit. You're telling me that you can't be taught. You're unteachable. So if you're unteachable, I'm not going to play a teacher in that environment. I'm not going to waste my time and effort. But you have to admit that this is very difficult. It's going to take time. But the fruits of knowing what you're doing and how to engage when not to engage, that's the stuff that makes us shine. We know what we're looking for, why it should materialize in price action, and we have a statistical probability of seeing it repeat over and over again. That's not 100%. It just means that your model that you find and fashion through your own experience in the tape, watching price, you're going to see what you see many times. And it's a byproduct of you doing that, not watching my videos, not watching my trade examples. I've never had a profitable student come forward and say, I watched your YouTube videos and it just worked for me. They're always the ones that say, I watched your videos, I took lots of notes, and I would go in, I start with one concept, one principle, and I applied it for weeks and months, and I tape read, and I do this, and I did some demo trading after I thought I had a model together, and I had to go back to square one, and I fixed what I was doing wrong, and I brought some toxic things to it, and I got rid of that stuff. I got rid of the toxic relationship. I got out of the bad job that was making me feel like I have to make more money right now because it was a time drainer. All these personal things that I can't as a mentor fix. But you have to highlight what those things are, and you have to tackle them. And when you fail because of those things that you're not telling the public, because I had lots of people come out and they make these little videos, I left ICT because I don't make any money, blah, 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 and I'm going to do something else. And that the something else never showed profitability either. So what's the problem? The common denominator is they got a fucking problem that they can't resolve because they ignore it. They put blinders on. And trading is a big spotlight. It's a very bright spotlight on everything that you do and think incorrectly. And traders that are honest and say, I have real frailties and flaws, and I had to correct these things before I found profitability. Those people, I respect those types of testimonies, even if they trade other stuff, whatever they trade. If they come out and they say, this is what I had to deal with in the beginning, and I had to fix a lot of things that were personal to me. And when I did that, then I could make money because you're in the way. And you don't want to believe that's the case because you think highly of yourself. And you spent all of your life as an adult, you spent all of that time hiding that part of you. You see it in the mirror. You know all of those things, your little love handles, those little cracks in your face. If you're a woman, you're getting those little, they call them 11s. My wife was telling me, am I getting 11s? Supposedly there's a little 2 lines between your eyebrows women are freaking out about now. I said, you're not getting Botox. I don't see it. And if it does, I don't care. We're getting older. Who gives a shit? Okay, you can wrinkle up like a fucking prune. You're my wife. I love you. The point is when you have these character flaws as a trader, we magnify them so much deep down under our skin, they will manifest and bleed out into our actions. And because you constantly beat yourself up or you rush yourself thinking you should learn it faster, you think that you're not doing as well as you should. So what is your subconscious going to do? It's going to try to counsel you. It's going to try to encourage you. And then you're going to feel that. And you're going to say, you know what? All this is doing is making me feel uncomfortable because I have shortcomings. And I don't like that. So to prove that and to cancel that feeling I have, I'm going to go in and take a trade. And the outcome of that trade is going to help distract me from what I'm feeling is the problem that I haven't corrected, haven't resolved it yet, haven't changed my way of thinking about it. I haven't done the work of cleaning up my house. So that trade, the outcome has so much more emphasis placed on the result of it being net positive or net negative, that you're creating this paradigm of trading is a be-all, end-all, life or death transaction. And you wonder why it's feeling so difficult for you. Because you're creating that perspective. Nobody told you that's what it is, but you've adopted it. And it's because you're weighing your future success, or likely not thereof, against your frailty right now. And you're struggling to get through that part. And you want to run fast through that, like a child in the dark. When the light gets turned off, you got to run past your closet to get to your bed. Well, you haul ass and jump in the bed because you think there's a monster in there. There is no monster. You told yourself there's a monster in there. So what do? You run real fast. You strip. You stump your toe in your fucking Tonka truck and tear the nail off. And now you're screaming and crying. And now there's got to be a monster now because you got bit by it. That's what we do as brand new students, as brand new traders. We have all of these little scary things that we keep running in our mind. And the things that we have that are personal that cause those things, they're deterrents to development. And until you correct those things, and all of us have them, there's never been a person that has no character flaws as a trader in the first stages. Everybody has their own problems. Impatience, greed, narcissism. You think it's going to be easy for you because you did well in sports. I did real well in academics, so that means it's going to be easy for me. My uncle thought that. Okay, and we listen to lawyers in our community, we listen to doctors in our community, we listen to engineers in our community, and we're all wrestling with the same stuff, and the same stuff is humanity. That's the common denominator with all of us. We're all human, and we're all prone to make mistakes. We're all prone to be harder on ourselves than we should be. And as traders, it is exasperated. It's like rocket fuel and pouring gas on a fire, because what you do and how you think dictates the results. You can have a winning model, perfect model. If you have toxic thinking about yourself, if you're not comfortable in your own skin, if you're not comfortable with the measured success that's reasonable in the beginning, you're going to do more than what's necessary. You're going to do more than what's required of your present understanding and skill set. And that is not production. That's not productive. It's not helpful. It's actually counterintuitive and counterproductive, because you're trying to make the model do something it wasn't designed to do. You want to show over time that you can follow the model. And many times I had students come forward, they explained what their model was, and I even confirmed, hey, look, that's a really good model. If you stick with that, you should do well. And they don't stick with it. And they show me trades. Well, I lost on here, I lost on that. Can you show me how I could avoid this? I said, well, show me your trade entry. And their trade entry has nothing to do with their model. So what are they doing? They're masking. They're putting blinders on. They're messing it up by not following the model, but they're looking for me to give them comfort, to soothe them, to put a little bit of salve on that wound they created, that little burn. And those students aren't developing because they're hiding their flaws. They're calling it something else. And many of you that are probably listening to this, I'm probably making very uncomfortable, because I'm pegging you right now. I've nailed you to the wall right now. And you're thinking, shit, he's talking about me. But don't feel bad, because that's the majority of everybody when they first start out. Or for the people that constantly stay in that loop of learning and never doing anything with it. The common denominator is you. You're the problem. You're the solution. You're the person in control when that starts taking progress forward and not going backwards. If you're stagnant and you feel like you're just taking new information all the time and you're not seeing any results, go back to square one. Tape read, no demo trading, no hard bias. You're just going in there, reading price action. In 6 months, you'll be a totally different person. But you have to put down the baggage. You got to clean up your closet, clean up your house, get rid of the bullshit. Stop telling other people what you're doing, because they're going to have you demand, actually, from you that you're showing progress, because they want to be entertained. Your best friends and your family, they just want to hear that you're failing, because that justifies why they did a good job of not listening to doing what you wanted to do. And that's the truth. And I'm telling you, that's God's honest truth. These people that you love and that you know as friends, they don't really want to see you succeed. Because if you do, that means you left them behind. And they didn't join and do it when you first started. And when that happens, it makes it very toxic. And the only way they can reconcile that is ask you constantly for feedback. And if you're not making lots of money right away, they feel better because they didn't do what you said you were going to do. And they stay in that rat race loop. And those things tend to repeat all the time. And it's worse in the trading community because everybody's struggling to find something in the beginning. They might make a little bit of money here, but then blow it, or sometimes never even find any success. And when they see other people encouraging others with their results and saying, I stuck with this, it was hard, blah, 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 they're going to come on there and they're going to talk all kinds of nonsense. And it's meant for them to soothe themselves. They want to see someone else feeling bad because that's what they feel. They feel like they're the only one that can't make money. So they go online, they troll. They go online and they discourage other people. And it's not just in our community, everybody out there, no matter what you're trading, they always have these people constantly running their mouth. And that's how you know who's making money. If anybody's talking about somebody else complaining about how, oh, you do this, you do that, they're not profitable, they're broke, and they're miserable. And that's the truth, man. It is the truth. Because nobody doing well has time to be bullshitting with that. Nobody does. Okay. So anyway, I spent a little bit too much time. I'm gonna have to go in the doghouse, I'm sure, because of this. But it is what it is. I'll catch up with you guys tomorrow, Lord willing.
Have a great one, everyone.
Bye, everyone.